What if one of the most beaten down semiconductor companies is actually turning into an AI infrastructure play? Wolfspeed stock has already gone through something most companies never survive. Bankruptcy, a massive restructuring, huge losses, and a brutal collapse in investor confidence. But now something very interesting is happening. Wolfspeed is trying to come back, and the big question is, can Wolf actually reach $50? At around $24 a share, that would mean the stock more than doubles from here. Sounds crazy? Maybe, but there is one part of the Wolfspeed story that could completely change the picture, and that is AI. So in this video, I want to break down the bull case, the bear case, my price targets, and finally, where I personally think Wolf could go. And trust me, the last part is where things get interesting. Let's get into it. First, let's talk about what Wolfspeed actually does. Wolfspeed is one of the major companies focused on silicon carbide, or SiC, and silicon carbide is becoming increasingly important for high-power applications. Think electric vehicles, industrial power systems, grid infrastructure, and now, AI data centers. That last category is especially interesting, because AI data centers don't just need powerful GPUs, they need enormous amounts of electricity. And that electricity has to be converted, controlled, and delivered efficiently. That's where power semiconductors can become extremely important. And Wolfspeed is trying to position itself right in the middle of that opportunity. Now here's the first major twist. Wolfspeed is not simply an AI stock. At least not yet. The company is still dealing with serious financial problems. In its latest reported quarter, revenue was around $150 million. But the company still reported a GAAP net loss of approximately $120 million, and operating cash flow was negative $84 million. So if you're looking at Wolf and thinking, AI is growing, therefore the stock must go higher, I would be careful, because that's not how investing works. The company needs to turn technological opportunity into actual revenue and eventually profits. And this is where my opinion starts to become more cautious. But here's the interesting part. Wolfspeed reported that AI data center applications grew approximately 30% sequentially, and that could be the beginning of a much bigger story. But can Wolfspeed actually turn that growth into serious revenue? That's exactly what we're going to look at next. Before we get too excited about the AI story, we need to talk about the biggest problem facing Wolfspeed: money. Wolfspeed is still losing money, and that's something investors simply cannot ignore. In its latest reported quarter, the company generated around $150 million in revenue, but it also reported a GAAP net loss of approximately $120 million, and operating cash flow was negative $84 million. So yes, there is an AI opportunity, but the company still needs to prove that opportunity can become sustainable business growth. Because investors don't get paid just because a company has good technology. They get paid when that technology turns into revenue and eventually profits. Now here's where the Wolfspeed turnaround story gets interesting. The company has already gone through Chapter 11 restructuring. That sounds terrible, but the restructuring also gave Wolfspeed some breathing room. Debt was reduced, financial pressure was improved, and the company has a chance to focus on rebuilding the business. But restructuring isn't the finish line, it's the beginning of the next chapter. Now Wolfspeed has to prove that the new company can execute. And that's probably the most important word for Wolf investors right now: execution. Can Wolfspeed increase production? Can it grow revenue? Can it improve gross margins? Can it reduce cash burn? And most importantly, can AI data center demand become a meaningful part of the business? Because if the answer is yes, the market could eventually stop treating Wolfspeed like a struggling semiconductor company and start treating it like a high-growth power semiconductor company. But there's another side to this story. If revenue doesn't improve, if losses remain huge, and if cash burn continues, Wolf could easily move in the opposite direction. So let's talk about the downside. My bear case target would be around $15 to $20. And honestly, I don't think investors should ignore that possibility. This is not a low-risk semiconductor stock. It's a turnaround stock, and turnaround stocks can move extremely fast in both directions. But if the company starts executing, the upside could be very interesting, and that's where the $30, $40, and $50 scenarios come in. Let's break those down next. Now let's get to the numbers. Where could Wolf actually go from here? I would divide the future into 3 scenarios: bear case, base case, and bull case. Let's start with the bear case. If Wolfspeed struggles to grow revenue, if losses remain large, if cash burn continues, and if AI demand doesn't develop as quickly as investors expect, I could see the stock falling back toward the $15 to $20 range. That's my bear case. Now let's move to the base case. If Wolfspeed gradually improves revenue, if the company continues reducing financial pressure, and if AI-related demand keeps growing, I think a range around $30 to $40 becomes much more realistic. That would still represent meaningful upside from current levels. But then we have the bull case. And this is where things get really interesting. The $50 target. Can Wolf reach 50? I think it can, but I wouldn't call $50 the most likely short-term outcome. For Wolf to reach $50, I think several things need to happen. First, AI data center demand needs to continue growing. Second, revenue needs to accelerate. Third, margins need to improve. Fourth, cash burn needs to come down. And finally, investor sentiment needs to change. Instead of investors asking, can Wolfspeed survive? They need to start asking, how big can Wolfspeed become? That's a completely different story. And if that happens, $50 becomes much more believable. But here's the twist. A move to $50 doesn't necessarily mean Wolfspeed suddenly becomes a perfect company. It could simply mean investors are pricing in future growth. And that's why this stock could be extremely volatile. One strong earnings report could send Wolf much higher. One disappointing report could send it crashing. So now the question becomes, what do I personally think happens? That's what I'm going to tell you in part 4. And I'll also give you my final Wolf price target. So here's my personal view on Wolfspeed. If I had to put my own numbers on the stock today, my bear case target would be around $15. My base case target would be around $35. And my bull case target would be around $50. But I would not personally make $50 my expected target. I'd treat $50 as the upside scenario that requires Wolfspeed to execute extremely well. And there is one thing I would watch more than anything else: revenue growth. Because if revenue starts accelerating, the entire Wolfspeed story could start changing. I'm also watching gross margins and cash burn. If those three numbers start moving in the right direction, that's when I would become much more interested in the $50 bull case. But if revenue remains weak and losses stay massive, I would be very careful chasing the stock simply because of the AI story. Remember, Wolfspeed isn't just an AI stock. It's a turnaround stock. It's a semiconductor stock. It's a silicon carbide story. And potentially, it's an AI infrastructure story. That's what makes Wolf so interesting. But it's also what makes it risky. So my final prediction is simple. Wolf at 50, possible. Wolf around 35, more realistic in a successful turnaround scenario. Wolf back toward 15 to 20, also possible if execution disappoints. Now I want to hear from you. What is your Wolf price target? 30, 40, 50? Or do you think Wolfspeed will fall below $20 again? Drop your target in the comments. And if you think Wolf could become one of the most interesting semiconductor turnarounds, hit that like button. Subscribe to the channel because we're going to keep tracking Wolfspeed, NVTS, and other high-potential semiconductor stocks. And remember, the biggest gains usually come with the biggest risks. So do your own research before making any investment decision. I'll see you in the next one.